Hello, and welcome back to The Investor's Opinion. Today is the first part of a two-part series where I show you how to analyze a company for the purpose of investing. Firstly, thank you so much. Secondly, if you have any questions in regards to this video or any content in this video, please don't be afraid to ask that question in the comment section down below. I'll get back to you as soon as I can, and no question is a dumb question, trust me. To start, a question I would like to answer first is, when should I start investing? The answer is now. My reasoning, one of Warren Buffett's golden rules to live by when leaving your money in the market's hand. Do not time the market. And the theory goes as so. If you are not currently participating in the market and the market goes upwards, you miss out. And the same goes vice versa. So you may ask, how do we beat the market consistently? Simple, buy low, sell high. And ladies and gentlemen, these are not stock prices we are talking about, no, it's value. It has always been the best time to buy a stock when it is of good value and to sell a stock when it is of bad value. There are an almost infinite amount of financial tools, analytics, and resources we can use to determine this. We use them individually and in tandem with each other to decide whether or not a stock is a buy. So, over the next two parts, I will show you how to make decisions in the stock market by analyzing companies so that you minimize your risk and maximize your return. Now that we've got most of the introduction out of the way, I'd like to state firstly a disclaimer: I'm not a financial advisor. I'm not advising you financially. All I am doing is sharing my opinion and my own methodology. In this part, I will go over three broad financial tools that are fundamental to any investment. The first, how to interpret the financial sector, how to perform an objective qualitative analysis, and finally, how to interpret and understand technicals. So how do we interpret the financial sector? We do so with its present information in mind and any future developments also on the cards. A very important tool when analyzing the broader market is to look at the broader markets. Specifically, when looking at the broader markets in the US, these are the Dow Jones Industrial, the NASDAQ, and the Russell 2000. These are huge indexes that encompass a large quantity of US and global and international markets. These broad market indexes may actually impact the future price movement of the stock that you were looking at. If the general broad market is looking incredibly bearish for specific sectoral issues, such as an oil crash in the Dow Jones, which is heavily incorporated with a lot of industrial companies which may be adversely affected by volatile oil price movements. This is something that you may need to take into consideration when looking at the timing of your investment. Definitely want to buy low and sell high. The broader market from the US context comes with two massive caveats. The Dow Jones and the NASDAQ are slightly different. The NASDAQ contains a lot more tech-heavy stocks and international American depository shares. These are shares based on international companies operating on other exchanges, such as NEO, which is a very popular stock at this current time. Now, the Dow Jones, however, is a little bit more industrially concentrated. It does actually harbor some stocks that reside in the NASDAQ as well, but to some degree at different weightings. And this is why sometimes one broader index will outperform another index. Moving on to investor sentiment, it is important to understand this, especially from a sectorial point of view, whether or not your investment has great tailwinds for the future. So firstly, a good example is electric vehicles. Today and right now, they have a lot of future value being added to their current present valuation. And this is because the tailwinds for EV and electric and greener energy solutions are getting a lot more policy-driven tailwinds, and this is all derived from the push to go to a more greener commercial space. So the investor sentiment in the electric vehicle market is quite positive, and therefore is something to consider when investing in an electric vehicle company. And the same goes for any other company in any other sector. Now, lastly, in this particular broader topic of the financial sector, I'd like to talk about research, news posts, forums. These are all going to be subjective to the individuals, including the forecasters. Forecasters, analysts, they get things wrong a lot of the time, and you shouldn't be basing your investments on those forecasts. But you should be using their context as a driving tool to adjust your long and short-term theses on the current investment you have. Forums are a great place to kind of understand the general investor sentiment and what people are trying to do in a mass context with respect to the price movement. Obviously, ignore the pumping and dumping news. There's a lot of very critical opinions, and no one is wrong. Be very aware of that and listen to no one, and keep yourself in a very individual, objective bubble where you take on information as it comes and adjust your future interpretation as present information flows forward. Do your own research and your own analysis, do your own Google searching, look at the financials yourself and understand them. We will go through financial analysis in the second part of this series, but for now, it's just an important part that you need to understand to make sure that you don't make decisions based on others and them being wrong, and all you have to do is blame yourself. Now moving on to a little bit more of the fun part of this investment strategy, the qualitative analysis. Returning subscribers will know that my qualitative analysis is derived from the common SWOT analysis: strengths, weaknesses, opportunities, and threats. We look at these from an inside looking out perspective. What does the company that we own or want to own, what are their strengths in their own sector? So EV companies would like to have strengths against their competition or other EV companies, whereas weaknesses can be sectorial or individual to the company. Anything that can stop it prosperous or growing or meeting those guidances that they set in front of them. Opportunities are anything that the company could do or is looking to do in the future that may increase revenue, earnings, or decrease costs. So these can be anything from geographic expansion all the way down to simply reducing overhead. Threats are quite common. These can be anything from government, which are quite scary, competition, or any other external factor that could impact the company negatively. A qualitative analysis is an analysis on the qualities of a company. Moving on to another very important part of my qualitative analysis that I particularly love is Warren Buffett's economic moat thesis. This is literally as it seems. If you were to put your company in the middle of an island with a bunch of other companies, and you were to depict them as a castle with a moat around them, how well would their moat protect that castle from another invading force or competing company? It's a very easy concept to interpret when analyzing companies like Apple and Microsoft, as these companies have moats that are perceptually quite wide, probably filled with lava. This is all to do with their balance sheet and their incredibly stable cash position. It would not be advisable to invest in a company that has a very weak or very, very shallow moat. Any other competition or a new entrant into the market could potentially damage the market share and revenue and business model of the company you're trying to invest in. Once we've kind of delved into the broader market and how it's moving, and then into our own qualitative analysis on the company that we have chosen to pursue, we can now start developing a thesis. A thesis is a personal objective analysis on the short to long-term price action of a company. This has to be written by yourself based on all the information that you can gather about the broader market, the sector that the company resides in, the company itself and its own forecasts and growth, and it needs to be able to be changed on a dime. As information comes in, a present interpretation of our future expectations must change according to the present information. This thesis must include everything from the SWOT analysis to the broader market and sectorial tailwinds or even headwinds. It's important that we note any negative or potentially disastrous outcomes or any trade agreements that could potentially negatively impact, or any policy changes that could negatively impact, so that we know what to do with our money when we get to those points. Because obviously day-to-day lives, we can't look at the stock market every day. So we need to make sure that we have a recorded file of why we invested in these companies. This way we can always go back to them and go, this development has been hypothesized or theorized or fits within my theory to either continue its bullish stance, or possibly now is a good time to start trimming off some of those profits. I personally keep a notebook of all my long and short-term theses so that I know that if any new development comes up, I haven't forgotten any particular important point that might be detrimental or even positive to my investment, so that I can make more informed and more consistent decision making. Now, this finishes our part on the qualitative analysis. Lastly, we're going to be looking at interpreting technicals. Technical analysis work by ignoring all other external factors other than what the information from the chart and the price movement gives us. Important crossover to mention between technicals and the broader market is that there is a particular tool known as the VIX, also known as the fear indicator. This particular indicator shows us when fear levels are high by evaluating the volatility and the selling, the amount of aggressive selling and buying that is occurring in the marketplace at that one time. If the VIX is going up, then there's a lot of fear and volatility in the marketplace, which usually entails a crash. If the VIX is falling, however, this implies that there's less volatility and people are more comfortable with the base that they bought in at and are less likely to panic sell or be shaken out as weak hands. For the purposes of this video and to keep things simple, we will look at, in my opinion, the most important indicators that have helped me through my lifetime of investing. Firstly, we'll be looking at price movements, trends, and indicators. Specifically, the indicators that we will look at today are the RSI and the MACD. A technical analysis hypothesizes that it can interpret and forecast economic behavioral incidences in the short term based on the price movement of the graph. If the price movement rapidly excels upwards, forcing indicators such as the MACD and RSI to start to move into higher ranges, we can then say that this particular stock in the short term is overbought, and the same goes vice versa. Now, the indicators that we'll be talking about specifically for this video will be my three favorite. The MACD, the RSI. We'll start with moving averages, as they are probably the most important and, if I was to say, most accurate form of price movement analysis. Specifically, I like to use the 50 and the 200 moving averages. These moving averages move with 50 to 200 points back from the current candle and creates a trend along that average. Stock prices generally use these averages as flooring and as support level or as ceilings when determining how and when the short-term price movement moves. Great long-term indicators are when the 50 moving average begins to trend above and bounce off of the 200 moving average. This is a great bullish sign and usually indicates either a breakout or a price run. Moving on to indicators, we'll start with the RSI or the relevant strength index. The RSI is a momentum indicator. It shows us the momentum of a stock going in which direction, bullish or bearish. If the RSI is above 40 and trending between the 40 and 80 mark, we generally perceive this as a bullish trend or bullish momentum. If it is trending below 40 to 0 mark, then we would indicate this as a bearish trend or bearish indicator. Next, we have the MACD, or the moving average convergence divergence indicator. This measures the divergence and convergence of the price movement in comparison to its moving averages. So if the stock is flying way far above the rail in comparison to its moving averages, or the gap between the stock price and the moving average is quite significant, then the MACD will be at a very, very high ratio. This generally doesn't withstand or withhold, and the price movement either must stagnate or fall so that it can meet these moving averages as the moving averages try to catch up to the stock price. This is a great way to determine whether or not to buy a stock now or later, as you don't want to be buying a stock that's just made a massive run up away from its moving averages. You may want to wait till the market shows either a stagnation or consolidation. And these can all be shown by the pictures that I've been showing on my left here, hopefully, and hopefully that gives you a better idea about what these indicators do. If you have any other questions in regards to the movement of these indicators, do not be afraid to comment in the section down below with your questions. I'll get back to you as soon as I can. Now, I hope this video has helped a lot of people answer those questions they had with me in my previous videos. If there are any others, don't be afraid to drop those comments down below and ask those questions. It's great for the channel. It creates engagement with the community. I like to build my audience more substantially, and I'd like to get to know you guys more as well. So please, if you enjoyed this video, drop a like. Also, don't forget to hit that subscribe button and ding that bell. It does help a lot. The YouTube algorithm loves that shit. So thanks so much again for watching. I can't wait to release that next video, which we all know which is gonna be. Thank you, and good hunting.